Hi, my name's Aaron Curry, and in this video series, I'm going to show you why you can stop worrying about your pension when you build a buy-to-let portfolio in the coming house price crash. And I'll show you how you can buy 2 to 10 houses at rock bottom prices. So you cash in on the biggest discount since 2009 without sacrificing time with your family or creating a second job for yourself. And ultimately, I'm going to show you how you can write a retirement date today that's less than 10 years away, because you'll have a bigger lifetime income than a £1 million pension would provide you, thanks to my unique 6 C's system. Now, that's a lot to cover, which is why there are 4 videos in this series. Now, before we go any further, I'd just like to explain why the video quality is not what I'd want it to be. We're coming out of lockdown right now, and we've got local lockdowns and everything else, but we still need to keep our distance from each other. So I can't work with a videographer. So it's just me with my laptop and a webcam. So if you want to know how you can buy 2 to 10 houses in the coming house price crash, so you can cash in on the biggest discount since 2009, without sacrificing time with your family or creating a second job for yourself, and the information is more important to you than the video quality, then you'll love this 4-part video series. Now, in today's video, I'm going to show you why you can stop worrying about your pension when you build a buy-to-let portfolio in the coming house price crash. It's easy, isn't it, for people to talk about buying at the bottom of the market. In fact, Warren Buffett says it best. He says, be fearful when others are greedy, and be greedy when others are fearful. Be greedy when others are fearful. And how many people can actually say that they've done that? How many people can prove that they were greedy when others were fearful? How many people can show you the steps that they took so you can do the same to seize the lucrative opportunities today? I'm one of the few people that was greedy when others were fearful. You see, when I started the Insight Group, my business back in 2009, and I started it then when fear about the economy and the property market was at an all-time high. That's when I started a portfolio building company, because I knew that when there's a lot of fear, I could pick up discount properties for my clients easier than at any other time. And that's exactly what I did. And I made a fortune for my first clients. I built them a pension that they could physically see. And I gave them a specific date when they would reach their property income goals. Now, there were many people, loads of people, that thought I was crazy. You see, most people mistakenly believe you can't make money in a property crash. The truth is that if you buy property at or above market value, you can't make money in a crash. In the boom of 2004 to 2006, many people thought that they bought great deals because they made a lot of money. You know, the market was rising. They'd buy a house, they'd do a £5,000 or £10,000 refurbishment, and they'd sell the property on for a profit. And they were like, yeah, I'm brilliant at this. I'm really good at this. In reality, the refurbishment they did didn't add any value. The market had just gone up anyway in value. They'd have been better to just buy the house, keep hold of it for 12 months, and then sell it again because the market had gone up, and not even bother with the refurbishment part of the thing. You see, what I'm saying to you is a rising market saves you from newbie mistakes. It saves you from newbie mistakes. I know this from bitter experience. You see, in my property journey, when it started back in 2000, I made every possible beginner's mistake. My first 10 houses were a disaster, and I almost quit property because it was so hard. But then I learned from my mistakes. I learned from other more successful property investors, what I call mastery. I went and found the best people I could to show me what they were doing, and I copied what they were doing. And from this time of reflection and looking at what they were doing, I was able to create what I call my golden rules to buy world-class properties. So I'd got 10 of these properties that weren't working and had been a disaster. I created the golden rules. My next 7 houses that I bought with my golden rules allowed me and my JV partner to quit our jobs if we wanted to. My JV partner is the person that bankrolled my property dreams at the beginning. So with only 7 of the right houses, we could both quit our jobs and never worry about money again. The reason why I could start the Insight Group in 2009 when the property market hit rock bottom was because of my golden rules. With these rules, I knew that I could make money from property in a rising market, in a falling market, and especially at the bottom of the market. I've used these golden rules to buy property for the last 15 years, and they've never failed me or my clients. I've built a personal portfolio of over 200 properties using these golden rules. I've bought over 1,000 properties for my clients using these golden rules. So I know that you can use them today to become financially free through property, whether you can build the portfolio yourself or whether you get somebody else to do it for you. Now, I'll tell you more about my golden rules to buy world-class properties and how my golden rules put 4 times as much money in your pocket. You see, property puts money in your pocket in 3 ways when you buy the right house. 3 ways. When you buy the wrong house, property only puts money in your pocket with cash flow, which is what most people think about and look for. That leaves 3/4 of your profits on the table. 3/4. Imagine just getting 1/4 of your salary today, like suddenly having 1/4 of it instead of the full salary. This is what you're leaving on the table if you don't buy to these golden rules, if you just buy properties targeted just for cash flow and you don't understand the other ways as well. When you buy property to my golden rules, your portfolio is 4 times more profitable. So you can reach your property income goals faster than you dare to do. And I'll show you how to use my golden rules to buy world-class properties in another video in this series. But right now, let me tell you about the coming house price crash and how you can cash in on the biggest discounts since 2009. So let's look at the reasons why house prices will drop 5 to 10% in October, November 2020. But first, let's start by looking at what's happening right now. You see, many people come to me as property investors and say, I don't understand. I thought, with COVID-19 and everything else, if at any time the market was going to drop, it would have dropped now. Why is the market not dropping right now? Well, let's think about it. What's going on right now? Well, right now, we've come out of lockdown, or different variations of coming out of lockdown, but you've got this pent-up demand, haven't you? You've had people literally locked away together for the last 3 months. So everybody that was planning to move house before lockdown, 450,000 sales that were going through before lockdown got shut down. They physically couldn't move, but for 6 to 8 weeks, they couldn't process, they couldn't continue and complete on their houses. Okay, so that all stopped. So you've got that pent-up demand of those people still wanting to move. You've then got all of the people that already had the houses up for sale and wanted to move before lockdown. Plus, you've got 3 months of people that would have moved in the spring or thought of moving in the spring that now also want to move. Okay? If you get all those people coming out at once and all wanting to move at the same time, guess what that does from a supply and demand point of view? Your supply stays the same, but your demand goes up massively. Massively. On top of that, you've got people that have fallen out while they've been in lockdown and decided they shouldn't be together anymore because they've lived so intimately. This is not right for us. We need to live apart. They need to move. You've got people that have missed each other during lockdown because they're in different houses and they desperately want to be together. They need to move too. So all of these people, plus the people that realigned and said, you know what, I need to live in the country. Do you know what, I need to be closer to the city and closer to my friends. All these people all looking to move. So what? Not a surprise, is it? Not a surprise as we came out of lockdown from the property world that you have a higher demand, supply stays the same, and prices rise a little bit. Prices rise a little bit. On top of that, mid-July, stamp duty thrown in for good measure. So the Chancellor comes out and says, I'm going to help with property prices because he knows what's coming, which is what I'm going to come on to in a minute. He knows what's coming. He goes, let's help between now and March of next year. Let's try and make this a bit more buoyant. Let's give some stamp duty discounts. It doesn't help us as investors, but it helps people buying their own residential properties. Unfortunately, we still need to pay that 3% surcharge, but it helps them with moving. So again, demand goes up a little bit. People go, well, if I'm going to get in, I may as well get in now. So demand goes up that bit more. So that's what's been happening. That's the situation that we've been in, as I'm recording this video. Now, just alongside that picture taking place, I just want to help you to think about why you might be confused about the housing market right now, why you might be getting a bit of a headache when you think about the housing market. I'm going to throw up a few kind of leading headlines and what they've been saying and get you to think about this. You see, I've already covered, here's the newspaper article that shows you 450,000 house sales stopped from going through. Okay, I've already talked about that. And then, as early as the 27th of May, we had newspaper headlines saying short-lived rebound in house hunter demand. So short-lived rebound, 27th of May. By the 2nd of June, the BBC were reporting, we'd only been out of lockdown for a few weeks from a housing point of view, a couple of weeks. The BBC were reporting house prices see the largest monthly fall in 11 years, says the Nationwide. Largest monthly fall in 11 years, okay? On the same day, the Daily Mail, 2nd of June, house prices may fall 14% this year, says the Nationwide, as a recession hits and people stall on moving after lockdown. So we've seen this horrifying news that house prices are falling, 2nd of June. 2nd of June. But guess what then happens? You see some other articles that are backing up and saying the same thing. The 12th of June, BBC report, COVID-19 may have a huge impact on the property market. You're like, are you kidding me? Is this actually news? We know there's going to be an impact on the housing market. If people are losing their jobs like they are, we know there's going to be an impact. By the way, is it a surprise that May's figures were down? We were locked up for a part of May. Of course, May's figures are going to be down. This isn't news. The BBC's article on the 12th of June goes on to say that UK house prices have posted their biggest monthly fall for 11 years. This isn't news. Of course they have. The very next day, 13th of June, we've got the Times writing, first-time buyers frozen out as the housing market heats up. How confusing is that? You've got the BBC saying worst time for 11 years. Then you've got the Times going frozen, first-time buyers frozen out. Why do they do this? They do this because they need to grab a headline. They need to grab your attention. So they take a stem of a story, which is only a tiny piece of the whole story, and they show you the stem because the headline sells to you. The headline sells to you. By the way, the Nationwide that were saying that May was the worst drop, okay, for 11 years. Guess what happened? Guess what happened? By the time we get later on, by the time we get the Chancellor giving his gift, then Nationwide figures at the beginning of July show that the prices rose 1.7%. And then they're saying this is the steepest monthly increase recorded by the Building Society for 11 years. Steepest monthly increase. Let's think about that. So it dropped massively in May, and then it went up massively the next month. Steepest increase, steepest fall. In fact, it just virtually stayed the same. It virtually stayed the same, but it dropped, then it rose. But that makes two massive pieces of news that they can share with you, makes it sound like it's a disaster or sound like it's booming, when in fact, excuse my language, but it's bull. It's absolutely bull. Okay, the market opened back up, and we did have, as I've already told you, this sweet spot of this demand of people flooding back out their houses, being able to look at houses again, being able to go out there. People like Rightmove, people like the estate agents love selling that story. Because why? Because it's good for Rightmove and it's good for the estate agents if you think the housing market is really booming right now. It's not. We've got that massive demand coming out, these people that want to move, but it's not sustainable. Okay? So, and the truth is, what is the truth? The truth is that we've got this mini boom going on, which isn't seeing a big impact. It means that the market is relatively buoyant. We buy off-market deals at the Insight Group. We see the real truth, because what you see is off-market is the people that have to sell fast. Mandatory, I need to sell fast, or I need certainty. That's the two main reasons people sell for discount, and we're buying those off-market deals at discount. So what's going to happen next? What's coming next? Let's think about the jobs market. The jobs market, we've got a bloodbath coming. And I don't mean to be incendiary. I don't mean to be like the news, but let's say it as it is. We've got some shocking statistics in terms of the job market right now. We're already, so many people already lost their jobs. So many people now unemployed. Many of those people, by the way, I was reading an article today, many of those people not even attempting to find a new job yet. They've said, I'm not going to attempt to find a new job yet because there's no point. There's nothing out there. Everything I apply for, there's 100 people applying for. I've run adverts. My business is booming. My personal business is booming. And we've run adverts for more people. And we're getting 4, 5, 6 times the number of applicants for any role that we advertise than we were getting this time 5 months ago. That shows you what's happening in the job market already. And we've still got furlough in place. Furlough is going to come to an end. We're starting to see a change, aren't we? As soon as the furlough started to change, okay, on the 1st of August, we started to see bigger job losses being announced. Some of the bigger companies letting more people go because suddenly they were having to pay for the national insurance contributions and the pension contributions. You know, over the next couple of months, we're going to see they're now paying for 10% extra of the salary. They're now paying for 20% extra of the salary. And at the end of October, we're currently seeing that furlough ends entirely. Furlough ends entirely. What's that going to do in terms of job losses? What's that going to do in terms of the marketplace? Now, whether you actually do lose your job, do you think people are worried about it right now? Do you think they're emotionally concerned? Some people you speak to are more fearful now than they were when coronavirus first came out. Because when it first came out, they thought we'd be locked down for a while, then we'd come back out and everything would be okay. But now they're going, am I actually going to lose my job in October? Am I actually going to have a job in 6 months' time? Is my business going to survive? Is the business I work for going to survive? If all these shops are going bust and going bankrupt, what's coming next? The big people fall first, but the small businesses will fall next. With all this travel being cancelled, with all this travel that's not happening, you see the TV shots of all these planes just sat on the tarmac. You know, that's millions of people's jobs at risk. Millions of jobs at risk. Okay? So it's a supply and demand thing, isn't it? So if people are concerned about their jobs, do you think they're thinking about moving to their dream home right now? Do you think they're thinking about taking that next step right now? Or are they just thinking about paying the bills and keeping a job? And making sure if they can't keep this job that they can find another job. Do you think the people on furlough are thinking about moving to the next property that they're going to buy? Or do you think as they come off furlough and lose their jobs, job losses go up, people will be thinking of moving? No, it's not going to be happening. So what's going to really be happening? What's going to happen in the marketplace coming soon? Coming soon. My team at the Insight Group, we look at £100 million worth of property every single month. We've done it. We've always done it, but we've done it right through lockdown. We've been buying right through lockdown, by the way. So our fingers are right on the pulse of what's happening with off-market deals, and our fingers are right on the pulse of what's happening with the estate agents and what all the estate agents are saying. Not what they're saying in their press releases when it's a big chain trying to keep the market buoyant. What's happening at the coalface in terms of the number of viewings that are happening. What's happening at the coalface in the number of properties being agreed. And I've already told you that we've seen house prices fall with off-market sales. Estate agents are keeping their prices high because there's currently a high demand, but they're seeing that wane. They're seeing viewing numbers start to change. And I don't expect that high demand to last long. And that's why we will see the market fall in October or November. And the fall is going to be 5 to 10% as sellers realize that demand does not mean they're going to sell their home. Because that demand is going to fall away. That demand is not going to be there. And when the demand falls away and the supply is still there, you've got a problem. Now, on top of that, as these people lose their job, some of them will need to sell. Some of them will need to move in with somebody else and sell one of the 2 houses that they've got already. They might move in with somebody that they were dating, but now they need 1 house instead of 2 houses. So they're going to be selling. So supply is going to go up. Demand is going to fall. I'm not an exact economist. I don't have a crystal ball. I can't predict exactly the date this will happen. But around October, November this year, that's when that is going to happen. That is when that is going to happen. And you want to be ready for that because you want to have the property knowledge in place so that if you're going to buy in these next 12 months, when's the best time to buy? It's when the market's fallen. It's when the market is down. That is the best time to be buying. That's when you get the best price. When demand is low and supply is high, you get the best price. But here's the thing. Here's the thing that I want you to get on top of that. So we're saying the best time to start buying is October. You need to be ready for that. October, November, December, buy. It's just a brilliant time to be buying. But I buy a few houses now each year. I've got over 200 already, but guess what? In this next 9-month window, I'm going to be buying like crazy. And I haven't bought like crazy since, guess when? The last credit crunch. And why am I going to be buying like crazy in this gap that's coming? Because now is the time. Now is the time. Now, what's going to happen once the market falls? Well, the bottom line is the underlying trends in our marketplace are the same as they were before COVID. Before COVID came along, you know, the Midlands and the north of England, for example, the market was really buoyant. We'd seen 7% rises for a couple of years in a couple of those cities. You know, you can go check this data out for yourself, land registry house price data. We'd seen this moving market. Okay, the London market was slowing down. It was still rising. It was slowing down as part of its normal pattern, as part of the journey that it goes on, but it was still rising, and we were seeing really booming rises in other places. That demand hasn't gone away. That demand, those people wanting to move to the next house hasn't gone away. But right now they're more fearful. Fearfulness, you know, we talk about mindset. When you're fearful, do you take lots of action or little action? You curl up in a ball, don't you? You stay as still as you possibly can so nothing sees you and nothing eats you. So when you're fearful, you stop moving. That's why there's Warren Buffett's quote there, be greedy. When others are fearful, you can go be greedy and get all the deals. Okay? And when others are being greedy, you need to be fearful because they're all out there eating. You just need to stay still at that point in time. Okay? So the underlying trends are really strong. But fear is getting in people's way. Fear is stopping people moving. Okay? What's the other thing in amongst those underlying trends that is absolutely massive in the UK? The truth about the property market right now is that it hasn't dropped off a cliff yet like it did in 2008. Okay? But also the truth is that sellers are going to drop the asking price, okay, or they'll accept lower offers. So the prices in estate agent windows are going to fall. You just need to be patient and get ready now to seize those lower price investments. That's what you need to be doing. But the underlying trend that I was just talking about, and the underlying thing that's a killer for you, you see, house prices on a small island, what are they driven by? They're driven by ambition. We want a promotion at work so that we can get on the housing ladder. Then we want a bigger house as we start a family and we progress our career. We want a bigger house, don't we? That ambition drives us to better our life, and that ambition and that drive to better your life is not going away. That hasn't changed. People still have that ambition. While they're fearful, they'll put it on hold for a while. While they're fearful, they'll watch what's going on in the marketplace. While they're fearful or they've lost their job, they don't even have the money to follow that ambition, they'll be stiller. They'll be stiller. So yes, house prices will fall as unemployment rises. Of course they will. And when the economy starts to recover, we'll see house prices start to rise again. In fact, we don't even need the economy to recover. That's what people will say. They say, well, it needs to have recovered. It needs to have recovered back to what? No, once we reach a new normal. We don't have a new normal yet, do we? We've still got people on furlough. We've still got local lockdowns. We've still got people wearing masks to go. My kids had to wear a mask the other day when they went out and went on some roller coasters and stuff. They went to the theme park. They had to wear masks walking around the theme park. Does that make you want to go to a theme park? No, that's not the new normal. But once we've reached a better new normal, when most people are living and working despite COVID-19, then we'll see house prices start to rise again. Okay? So because the desire to get on the housing market has not disappeared, the desire to buy a bigger house has not disappeared. If anything, it's risen as people want that garden space more. People want to move out of the city and be in a bit more space. People want, they've been locked away. If you've got a flat in the centre of Manchester, you'd rather be on the edge of Manchester in a suburb where you've got a garden and a bit more space. So once we've reached a new normal, we will see the house prices start to rise again. And that's why if you want to buy investment properties at rock bottom prices, just like I did for my clients back in 2009, you've got to get ready now. Because the bottom of the market is not going to last for more than 5 or 6 months. So if you want to confidently buy property at the bottom of the market with confidence, you need to know what you're looking for. You need to know how you're going to pay for it. And you need to have a team to refurb it and manage it. And you need to get that in place right now. Because that's going to take you 2 or 3 months to get that fully in place. You see, when you know exactly what you're looking for, guess what? You'll find it really easily. when you know how you're going to pay for the house and how you're going to finance it, and you have a team ready to refurbish and manage the property already, then taking action, guess what? It's easy and it's fun. So when you're trying to find those things after you've bought the deal, so after you've agreed to buy the deal, you're trying to work out how to finance it. After you've bought the deal, you're trying to work out how to refurb or managing it. Then you're setting yourself up for sleepless nights. I'm telling you this because I've been there in those first 10 deals, because I didn't have a plan. It wasn't all structured. It wasn't in place. It was chaos. You know, I've been there, done that, and I know it's not fun, which is why I'm speaking to you now. You see, I want to help you avoid that. I want to help you get ready for what's coming, for the massive opportunity that's coming for you right now. And we can do this ethically, by the way. We're not going to go and rip people off. We're not going to go put people in a bad place. These are people that will need to sell. They'll want to sell their houses to move in with their spouse. They'll want to sell their houses because they've lost their job and they need to just get stability again. And they'll have their houses up for sale and they might not be selling, and it will give them the certainty that they need. So it helps them. We're not going to go rip people off. It helps them and it helps you. You see, I want you to do that. I want to help you get ready so you can confidently build a property portfolio at the best time in over a decade. Because if you don't have the confidence, you'll fall over, you'll stop. So we need to confidently do that. So as I said at the start of this video, 80% of success comes from mindset, only 20% from the proven systems, the expert teams, and the specific tools. Okay, if your mindset has been shifted, if you're listening to the news, if you're watching the newspapers and reading the newspapers every day for half an hour, I dread to think where your mindset is right now, because it's horrendous out there, isn't it? Layla and me probably turn on and watch the news once every couple of weeks because we want to just get an update on what the latest rules are, so we follow the rules correctly. But the infiltration of negativity, the infiltration of bad stuff, it's horrendous. It's horrific. You've got to protect your brain. This is the only asset you have right now. This is your main asset in life. You've got to protect it from what's coming out there. So that's why this video series is going to give you the mindset skills as well as the skill set to build a buy-to-let portfolio that gives you a bigger lifetime income within 4 years than you'd get with £1 million pension saved up. And all you need to do is learn how to buy 3 of the right houses this year, and within 4 years, you can be on that kind of an income. And anybody can learn how to buy 3 houses this year. Anybody can, with the right support, the right thinking, the right training, the right mindset, the right skill set. So in the next video, I'm going to show you the 3 ways to become a successful property investor, and the one of those 3 ways that's fun, fast, and simple. I'll send you that video in a couple of days. Before then, I'm going to ask you to take some action. You've been watching me, you've been learning. I want you to take some action with this. Don't just be passive as a learner. It's the learning times the action that gets people results. So you need to take action too. So I want you to grab a piece of paper right now and write down on a piece of paper your commitment to yourself to buy property at the best time in over a decade. And I want you to stick that piece of paper on the wall of your bedroom or your office or your wardrobe door or your fridge. I want you to stick it somewhere where you'll see it every day. So this piece of paper is going to have your commitment on it that says, I'm going to do this. I'm going to get this done. I'm going to get the skills I need and get this sorted. And I'm going to do it this year because it's such a massive opportunity. Why is it important to write this down? Because people that write their goals down, even if you never look at what you wrote down ever again, they're 60% more likely to achieve them than if they don't even write them down. 60% more likely. Why wouldn't you take 10 seconds, 30 seconds to write your goal down? People that write their goals down and look at them regularly, like I just told you to do, it virtually doubles the chance of you being successful. Doubles. It's 80% is the stat. 80% more likely to achieve it because you wrote it down and you saw it regularly. So this on its own is the simplest mindset step that makes your property success 80% more likely to happen. Guess what successful people do? They know clearly where they're trying to get to, they write it down, and they look at it regularly. So don't just nod in agreement with this video. Get that piece of paper right now. Write down your commitment to yourself to build your property portfolio at the best time in over a decade so you can create a financial fortress that protects your family for generations to come. And then stick that piece of paper somewhere where you will see it every single day. This is a simple action and you'll be amazed at how powerful it is. In the next video in this series, I'll show you how to turn 3 houses today into a greater than £50,000 per annum income in only 5 years. Being specific, I'll show you how to turn it into £52,200 £286,000 per income in only 5 years. So you reach your income goals faster than you dare to dream. So go take the actions that we've talked about. Lock this in your diary. Look out for the next video in the next couple of days. And in the meantime, stay safe, stay well, invest with knowledge, invest with confidence, create financial freedom. I'll see you soon. Thank you.